This is ForexOverviews.com with the short-term analysis for Euro-Dollar Forex pair. This is the daily time frame, and we can see that on this trading session here, market has finally restarted the down move of this leg here after some slow upward retracement. And we now can expect that the market is making some A, B, C, D to the downside, at least to the 618 extension of this ABCD. Also take a look that market has reached this C point right at the 50% fib resistance, which is typical in this case because this is a thrust, and the 50% fib levels are typical for retracements after the thrusts. On this another overview of the daily time frame, we can see that the market was trading inside this nicely looking upward channel here, and market by this move down has broken below the lower border of this channel, has made the slow retracement, retested this lower border, and now is continuing the downward move. This is some sort of the kiss and goodbye pattern, when the market breaks below the channel line, retests the line, and continue the move to the downside. So this is a nicely looking setup and configuration for the market. On the 4-hour chart, we can see that this upward retracement that was on the daily time frame taken the shape of the bearish wedge pattern, this structure here. Take a look how good the market was contained inside of this wedge, reaching the 50% fib resistance and also the weekly pivot resistance one. In fact, the market being held by the weekly pivot resistance one is a very good sign of bear power on the market, because usually the resistance one holds the market in the bear trend. And also the market has made the wash and rinse here in this bar, the wash and rinse of the previous high that I have marked with this red circle here. So the wash and rinse is a bearish sign also. It was a fake breakout of the wedge to the upside, and after this the market started strong move to the downside. Also look that market has stopped at the monthly pivot resistance, support 1, and also approximately the 50% fib level of this roll up move, almost reaching the 618 support level. On the hourly time frame, we can see more precisely how was this breakout to the downside of the bearish wedge. We can see that the market has made it in the shape of the ABCD pattern, and by this down move the market has totally passed the 100% extension of this ABCD, totally disrespecting this level, and reached the 1618 extension of this ABCD. Now we can see that the market is at support by this extension, 1618 of ABCD, the 50% Fibonacci level around this area here. Market also is near the weekly pivot point for this week, and also take a look the previous lows, which are the classical technical analysis support levels. So by this support here, market has the probability to make some upward bounce, and I would like to see a retracement up until this area, the K area, the area of confluence of Fibonacci resistance. And also this will be the same area of the daily pivot point for the current trading session. So this area between the 134 and 75 and 134 and 90 or 135 even is a nice area to search for signals to enter short on the market, or to add positions if you are already bearish. And I would like to see the market reaching this area by making some ABCD pattern here, so we can enter short right here. This will be the best scenario for short entry. Not always the market reach this conference area. Sometimes the market reaches just the 38 Fibonacci resistance. In this case, we must pay attention to see how the price action will be between the zones to search for signals to enter short on the market. But I would like also to warn that we have some risk for upward continuation. Let's take a look again at the daily time frame. We can see here by this picture the risk for upward continuation. Maybe the market is forming support here and will proceed the move to the upside, making this Gartley 222 sell pattern that is marked with the red lines. Also note that the completion point of the Gartley 222 will be exactly at the 78 Fibonacci resistance, which is very desirable for the completion of the Gartley 222. So this is the risk for taking the short position right now. Especially in my opinion, I think that we have more chances for downward continuation, as I have already shown here with this ABCD to the downside. So for the upward risk, we must pay attention on the levels that I have already specified, especially the K area and this upward trend line here. So if the market, by doing the retracement, will break above this yellow rectangle area, the K area, and especially if the market will break above this upward trend line, this will be a warning sign that the market is making bull power and will proceed higher. Okay, so we must pay attention on this situation here. That's my overview on the market. Thanks for watching.